Continuing where we left off yesterday, we were talking about how over the weekend we had military escalations in Venezuela with the US going into Venezuela and taking Maduro into US custody, right? Now, this is no October 7th and it is no war that has started, but we do have to be on the lookout for any sort of escalations in here, whether we see other countries getting involved, whether we see Trump possibly sending even more troops to Venezuela and doing more operations. Again, these types of geopolitical tensions add to that bullish fire on gold. So you can see here on Market AI, we have a very strong bullish bias at the moment from a swing trading bias, day trading bias. Everything is bullish on gold. If I pull up the market right here, you're going to see that as well, right? So we can see that from a technical perspective, and we know that this is being backed by the current fundamentals. Now, not a lot has changed other than the fact that Trump has, I guess you could say, is sending threats. They're not literally sending troops, but he's basically saying he does not care what anybody has to say. I mean, Trump right now is after everybody. If you're against the US right now, you're on the losing team. That's my honest opinion. And so right now, let's just make sure, yeah, look, Trump says the US is not at war with Venezuela. I mean, we know this because, again, there was no casualties on the US side. All we saw was casualties on the Venezuelan side, which is, again, very sad to see lives being taken. But unfortunately, some things, in my opinion, they seem necessary when it comes to this sort of military intervention. But we won't get into any controversial topics. Let's actually go ahead and talk about the markets here. So again, we still have fundamentals backing our bias on gold, right? Now, looking at the chart here, let's just do a quick recap of this morning's price action. And I'm actually going to show you guys a really cool feature in case you haven't noticed already. So what you have here, at 10 a.m. today, we had ISM manufacturing PMI being released. So you can see 10 a.m. right here, the reaction clearly towards the upside. Now, you might be asking yourself, how could you have prepared for a situation like this? Now, on Market AI, if you click on the economic calendar, and before the report was even released, you can click on this icon right here, and it gave you a playbook for the dollar. So we know that that is the inverse of gold, meaning that if we saw a report coming out below expectations, this could be bearish for the dollar, meaning that that could be bullish for gold, and vice versa. You had the playbook for in case it came out above, and then in case it came out just sort of on forecast. Now, as you can see, 47.9 is what the report came out at. That falls under the below category, meaning that that's most likely going to have a negative impact on the US dollar. So just like I showed you guys right now in the reaction, you can see that gold at that moment breaking above a resistance, retested that resistance multiple times, and then you had multiple rejections off of this area, easily giving you about 150 to 160 pips worth of opportunity. Like, I always tell people this, just because you see 150, 160 pips worth of a move, does not mean that you have to find a way to take advantage of the entire move. Everybody trades differently. Some people are able to take maybe a break and retest and they capitalize on maybe 40 pips. Some people took advantage of 80 pips. Some people took losses because they were taking sells at this area, right? Everybody has a different trading style. But when you have data, like I just showed you guys, backing up the current technicals that you see, why would you fight that? If you see that the fundamentals are bullish, if you see that price action is clearly breaking above and maintaining above a resistance, why you as a technical trader are you trying to sell at the highs? It makes zero sense to me. But to each their own, right? So now we're up to date. We understand very much, again, why gold did continue bullish after market open. Again, those military escalations, rate cuts still being priced in to the markets. And we have now on the intraday timeframes some new highs being created. We're starting to create this very nice structure towards the upside with aggressive buyers continuing to step in. Right now we're seeing a little bit of less volume in comparison to like when the market opened, but it is Asian hours. We do know that during Asia, not always will we see the strongest of volume. So I'm going to go ahead and mark off this new high as a intraday resistance here. And so I'm going to prepare myself to, again, continue following the bullish bias. We're still bullish on the technicals. We're bullish on the fundamental side. If we take a look at, for example, this daily time frame, again, look at gold. Very, very strong bullish price action. Other than this pullback that we had here towards the end of the year, price literally just came to retest previous areas of support. And then overall, with the military escalations we had over the weekend, that just gave gold enough of a push and enough strength to continue pushing towards the upside. 4 hour candles or 4 hour time frame as well, still very much on the bullish side, breaking above the 4400s and then making new highs for us, right? So again, right now, how we should prepare ourselves to trade this is we have to be on the lookout for price to possibly create some sort of range within here to then see a nice breakout towards the upside. Or if we get breaks below this zone, then I would be cautious and I would be patient and wait for those deeper pullbacks to take place before I look to take advantage of any buys. If any of this is going to be faded out, if we're going to see bearish price action, the structure point that I would follow would be these 4400s. If we can get below these 4400s, then it's very likely that here on the market page, you're going to see some sort of bearish catalyst that kicked in. Because again, you can see here on the market page what supports the bias, what goes against the bias. So we know that if we see things that go against that bias, we'll be able to see it here on the news feed. And then of course, we'll also follow that with the price action in case we do get below certain zones like I have listed here. Now tomorrow we have ADP national employment. So this is a labor market report. It's being released at 8:15. So I'm gonna go ahead and click on this icon as well. And again, you can see the playbook and understand this really well. So that way tomorrow, when the data comes out, instead of you being confused, looking at Forex Factory, trading economics, not understanding how that's going to even impact your pair, on Market AI, super simple. You simply wait for the data to get released. You see on which side of the playbook it falls on. If you trade a pair like gold and you're looking at how this is impacting the dollar, then you know that that is the inverse and therefore you can take better trades.